We have breaking news out of Capitol Hill. House Speaker Nancy Pelosi announcing that she is opening a formal impeachment inquiry into President Trump. The president taking to Twitter to blast the move as a witch hunt. His latest tweet, he's had a series of tweets in the past 10 minutes or so, is simply presidential harassment, exclamation point. We'll bring you the latest as soon as we get it as the hour progresses. In the meantime, we do have an earnings alert on Nike, the stock hitting a fresh all-time high in the after-hour session. For more on the results, let's get to Sarah Eisen at the NYSE. Hey, Sarah.
Hey, Melissa, good to see you. Another strong set of results from Nike, continuing to defy what the company views as a volatile macroeconomic environment fraught with geopolitical risk and a rising U.S. dollar. It affects them, but Nike continues to shine, beating bottom and top line, punctuated by 22% revenue growth this quarter in China. Mark Parker, the CEO, just wrapped up his initial comments on the call. He addressed the elephant in the room and the elephant in the market for this stock, which is the U.S.-China trade relationship and the new tariffs that could impact Nike on apparel, consumer products, and footwear. Listen.
In relation to tariffs, we've been clear that we strongly believe in the power of free and fair trade. Historically, we've effectively navigated through excessive duties, and we're confident that we'll continue to do so under the current dynamic.
So projecting some optimism there around the newly announced tariffs. Analysts say this is a company that has about 25% of its manufacturing exposure in China, but it is nimble and able to move factories around the world. It's been in places like Vietnam and Bangladesh for a long time, and so they don't see a huge impact. Besides the strong China results, other factors that led to the big beat that Parker led off the call with, digital continues to grow very fast for Nike, talking about the growth that they're seeing particularly in their sneakers app, and direct to consumer has been a huge strategy that's been paying results for investors lately. In other words, going to the apps, going to the website and the stores to the consumer directly instead of relying so much as it has in the past on wholesalers like the department stores. He also mentioned some of the new initiatives and the new sort of growth areas of the quarter. The Women's World Cup, for instance, he said their innovation really paid off. Their apparel revenue was 4 times the size of the previous World Cup in the all Nike final. He mentioned the new Joyride, which is kind of the new running sneaker that was a big hit during the quarter, and that Zion Williams signed with the Nike family this quarter. So clearly, Nike is giving consumers a reason to pay up. The margins were higher, and the results around the world, including in Europe, which hasn't shown strong results for American companies lately, and North America, its home market, all coming in better than expectations. Melissa.
All right, Sarah, thank you so much. Sarah Eisen at the New York Stock Exchange. That stock again up 5.5%. If you had to pick it apart, is there anything to not like?
Yeah, a little bit. So
okay.
North America was up 4%, and you know, essentially in EBITDA terms it was up 2%. So that which was the bright spot in the last couple quarters is the spot that actually now people might say, hey, you know, maybe they're petering out a little bit. Maybe some of the areas of growth that include women's, digital, and you know, essentially some of the apparel business that's booming in Asia is not happening here. I'm not ready to do that. And again, what's interesting is the way Nike flies in the face of every other discretionary consumer brand out there that talks about Asia.
Yeah.
Again, up 27%. When you talk about the pan-China region for them being a place where, again, they're seeing it in apparel, they're seeing it in women's, they're seeing it in areas that actually are a little bit different, a little bit more diversified. It's very exciting.
And you would have thought they might have set the bar a little bit too high with last quarter's China results in terms of the expectation going in, and yet here they are. Yeah. Very strong.
Well, they just continue to execute. I mean, Nike's a company that's just absolutely crushing it right now. This whole direct-to-consumer thing where they're trying to offer the right product at the right time to every single consumer that they could possibly sell to has just been downright impressive. If I were to pull out my phone and hop on Instagram, it's kind of creepy, but they're probably going to show me the same exact shoe that I'm interested in buying. It's wild, and they're crushing it with their digital presence. They've got a sneakers app, a Nike app. They've got all these different apps, and it's just making it very easy for the consumer to continue to buy.
To me, the most impressive thing was the gross margin, right? So it's revenue minus the cost of the shoe. And so that gross margin expansion was really, that was pretty impressive. So that's telling you they have pricing power, right? That's really important. And so if you can do that, and then to also have your SG&A under control, then you get to a huge earnings beat. The only tiny little negative it was that they had a better tax rate, which sounds like a positive thing. It is, but it's not a recurring thing. So I don't know. This was just really impressive on all fronts. On top of, the bar was high, and they just jumped right over it.
Yep.
Still a big valuation, and we've all said that for a long time. So the April high, I think, was 90 or so. We're basically there now. You want to sort of punch some holes? Okay, North American revenues were a little lighter than expected. That was offset, to Karen's point. Gross margins up 130 basis points. That's really good. Year-over-year EPS up 26%. That's really good. Inventories were up 12% for the quarter. That could be a great thing if the demand is there. But if the world goes sort of pear-shaped over the next couple months, you wonder what that 12% inventory build off a 7% sales growth. Go ahead.
Maybe that's on, trying to get in front of tariffs and just building inventory.
Trying to get in front of it, exactly. But that's great if there's demand on the back end. But again, if the world sort of goes sour,
then they're stuck with the inventory.
So the point is this: big valuation, great quarter. I'm just trying to play devil's advocate. But $90 is sort of your line of demarcation. It is imperative to see how this thing trades tomorrow. If it reverses like we've seen before, then I really think you got to consider taking profits and pulling the ripcord.
Okay, again, Nike up more than 5% right now.